Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome back to Quora, where we dive into the world of finance and explore some of the most exciting investments out there. Today, we're going to talk about a lesser-known tech giant that's been making waves on the S&P 500. Axon Enterprise, a company based in Arizona, has seen its share price soar an incredible 3,200% over the past decade, making it the fourth best performing stock on the index since 2015. But what sets this company apart from the likes of Nvidia and Tesla? Axon develops, manufactures, and sells conducted electrical weapons under the Taser brand, as well as providing software and body camera solutions for police forces and security services around the world. One of the most interesting things about Axon is its position in the new US-UK technology prosperity deal, which has already generated over $350 billion in public and private investment. This deal could be a game-changer for defense stocks like Axon, and it's likely to have a significant impact on their growth prospects. But despite this promising backdrop, Axon's stock is currently trading at a whopping $776 per share, raising questions about whether there's still room for investors to consider it. Let's take a closer look at the numbers. Revenue has been a real bright spot, with sales rising 32% year-on-year to $2.39 billion in the second quarter of 2025. Earnings growth was less dramatic, up just 6.9%, leaving a net margin of 13.6%. Now, one thing that does stand out about Axon is its relatively low operating cash flow, with only $275.6 million generated in the latest quarter. This could make it more vulnerable during periods of rising costs or slowing demand. And when we look at valuation metrics like forward price-to-earnings and price-to-book ratios, Axon's stock is trading at a premium. The P/E ratio sits at 115, which is the ninth highest on the index. So why are investors so optimistic about Axon? Well, much of its recent share price growth came after a November 2024 rally sparked by strong quarterly results. However, since then, momentum slowed, and the stocks barely moved in the past 4 months. This suggests that expectations may already be stretched, making it harder to see where the stock goes from here. Industry risks are another thing to consider. Demand for Axon's products often rises in times of political unrest or heightened security concerns. While this could be a growth driver, it also makes earnings unpredictable. And with a valuation this rich, even a small earnings miss could trigger a sharp fall in the share price. So is Axon still worth considering? Well, I think long-term investors have definitely been rewarded handsomely over the years, but with a valuation like this, I believe much of the easy growth may already be priced in. However, as we all know, US tech stocks don't always follow logic. Axon remains a unique play in a market dominated by AI and semiconductor stories. For investors looking to diversify into a different kind of growth stock, Axon is definitely worth considering, but perhaps with a degree of caution. As I always say on Quora, it's essential to do your own research, stay informed, and never invest more than you can afford to lose. Thanks for watching, and we'll catch you in the next video.